This is a chart of the Dow for Friday, February 28th. As you can see, it was extremely volatile, and for most of the day, the chart was minus 3% and even minus 4% at around 10 a.m. And also, very close to the close, it was still down 3% until right around 3:44 p.m., as you can see there on your chart. And then all of a sudden, the Dow just skyrockets higher. Some of my hedge fund contacts and other financial professionals were complaining about it on Twitter just in amazement. So was it the plunge protection team? Was it one of those? Was it the Federal Reserve? We don't know, but there was definitely an attempt here in my opinion, on the chart to paint the tape for sure, as the Dow was extremely volatile. This has to do with a 200-day simple moving average. So a lot of financial professionals look at this, even fundamental people also look at the 200-day moving average. And if a stock or a general stock market index is below a 200-day moving average, or gold prices is above or below a 200-day moving average, it can normally mean something important. So if a stock goes below its 200-day moving average, or a stock market index goes below its 200-day moving average, this is normally looked at by financial professionals as very bearish. And this is what we are seeing now, despite the rally in the Dow on Friday. So the Dow has already gone below its 200-day moving average this week. The 200-day moving average, according to FactSet, data set used by financial professionals, was 27,231, according to this article that came out this week. So the Dow, even despite the rally into the close, and I think there's a lot of suspicious things about that rally, the Dow Jones Industrial Average is still well below 27,231. The Dow, even with the rally, is still at 25,409, although for most of the day on Friday, the Dow was below 25,000. But for it to be a full bear market, it probably has to go 20% down, 20% correction from its all-time high. But it was looking very, very bearish for most of the day on Friday. This article was also from this week, and this talks about the S&P 500 is also below its 200-day moving average. The 200-day moving average for the S&P 500 is 3,046.91, and the S&P 500, let me just pull it up on my screen right now, is below 3,000. Last time I looked at it, it is at 2,954.22, below 3,000. So a lot of these major stock market indexes were down enormously on Friday, and they had pretty sizable rallies, especially into the close. Again, very suspicious, maybe plunge protection team, but definitely very suspicious. Now, remember, I covered this story earlier this week. This was the op-ed from the former Minneapolis Federal Reserve Bank president, Naranja Kocher-Lakota, and he is very well respected by people on Wall Street and the federal and current Federal Reserve people, and he was arguing for at least a 50 basis point rate cut immediately. So the other people at the Fed are definitely taking this into account. From earlier today, talking about how the Fed is now ready to cut rates, and the rumor is at least a 25 basis point rate cut. Probably next week could be an emergency meeting even before the March meeting. So we could have a emergency rate cut. The rumors going around Wall Street are that there's an emergency meeting for the Federal Reserve. I don't know if that's going to be in person. I don't know if there's conference calls between Federal Reserve banks. I don't know if the Federal Reserve is coordinating things with the European Central Bank. But the rumors going around Wall Street are that there could be emergency rate cuts before the Fed meeting based on the stock market indexes, because they are, again, signaling very, very bearish signals. We're not in a full bear market yet, but if we do have a 20% correction in the stock market, the Dow Jones would have stayed -3 or -4% today, that would have been an absolutely total enormous move of down 15, 16%. So that would have been even worse than what it was on Thursday, just compounding down even further. And the rally at the close there, right before the stock market closed, was again very suspicious. Finally, this is the last story here I wanted to talk about. Goldman Sachs is actually expecting 3 rate cuts by June, but the way things are going and the rumor that's going around Wall Street is that there could be 3 rate cuts and another type of helicopter money drop or not QE program a lot sooner than that. So Goldman Sachs is expecting 3 rate cuts by the June meeting. But the way things are going, to try to stop the stock market trend with how bad the global economy is, the global supply chain, China's economy, the data that's coming out of China with the PMIs. The rate cuts may happen before that. Finally, wrapping things up here in this short little video, I just want to put it out there that unfortunately, my Google AdWords revenues for this week, I think I only had one video that had full ads on it. So what Google and YouTube have been doing is they run ads on my videos sometimes for an hour or two. So I check it initially to see if they remove the ads or not. And then it'll look like that the ads were not removed. And then I'll check back 2 or 3 hours later and they're gone. So unfortunately, that has happened all this week. I've had, I think, one video that actually made ad revenue, but thankfully, I'm getting an enormous amount of Patreon account contributors that are signing up, and there's unique content behind the paywall if you want to check that out. So you can help me grow this channel, help me reinvest in my business with a new laptop and other equipment in the future so I can upgrade things and continue to produce great content. Because, you know, if I'm not making any money from any of the content on Google and YouTube, I mean, the odds of me probably continuing to release content are going to be pretty low. Okay, well, that's it for this short little video. Comment if you think below the video about how suspicious it was that the stock market rally there on that Dow Jones Industrial Average chart came in at 3:44 p.m. and the chart just goes vertical. Now, maybe the rumor was planted with the Fed rate cuts, but I think it's more suspicious than that. But I think there's a clear attempt here to try to paint the tape to make it look like the stock market is not about to enter an enormous bear market. But the reality of the global economy, the Chinese economy, the supply chain, things are going to get worse before they get better.